Good morning to all traders. CAD against yen is setting up as the perfect carry trade right now. Sitting around where we at 110.50, 110.70 with both macro tailwinds and a clear technical setup behind it. Let's start with the yen problem. Japan's Prime Minister Takaichi, the new one, is pushing hard for stimulus while keeping rates low. The BOJ is cooperating. No hike is expected in December, despite inflation creeping towards a percent. And this keeps, of course, the yen structurally weak. So traders are borrowing cheap yen and deploying into higher yielding assets like the Canadian dollar. We also see a similar trend in the euro yen at record highs. GBP, JPY, we don't want to touch as much because the pound and Britain have their own uh, risk events to take into account. Aussie against the yen at a similar sort of setup, I would say technically both and fundamentally. New Zealand against the yen, we don't want to go because Aussie is a better candidate at this particular stage. The Swiss franc against the JPY as well at record highs, and the euro, right? So Europe is at record highs against safe haven JPY. That also shows the relationship between the two safe havens. Of course, that we are actually picking the weakest safe haven currently with one of the strongest risk assets. Maybe most certain as well. We don't want to go to the USD JPY option either because there's a lot of assets that is still with the dollar. Okay, so that's our pick. Is the Canadian against the yen. Now, in Canada, the US government reopen, of course, just removes a major uncertainty. Cloud oil is pushing higher. The Bank of Canada is comfortable holding rates at 2.25. And of course, the loonie is getting stronger when risk sentiment improves. And that's exactly what's happening. You're earning the interest differential every single day while the pair appreciates. Technically, look at the charts. We have formed. We could look at it in two different ways, but we have formed an inverse head and shoulders pattern if we exclude this drop, which saw a retest recently at 108 or so territory few days ago, actually at the beginning of November. But eventually, what this does now, if we measure the distance to the neckline and from the breakout up, what this does is bring us from a low of 108 or so up to around the 116.65. Okay, so support still is in this area, perhaps even 108.87, and the previous swing at 110.36 hasn't really yet become that. We have short-term resistance at 111.52, very important level to take into consideration. And if we also take into account the Fibonacci's, we'll look at 112.14 and then 115.10, the 61.8 and the 78.6 Fibonacci's of the entire leg to the downside, as well as, of course, having to pay attention to the 50%, which comes very close to the 110, and the 110, of course, is a very strong psychological level. So as long as we are above 110, the strategy is to the upside. We are also looking, of course, at the previous high, 118.83, and I will explain why in a minute. But first, let's just look at the strategy over here. I would be looking, since we have successfully retested that neckline here, let me just highlight that for you. And we have retested the RSI, so there is also room on the RSI in the daily here to move towards the 70 and above. So even in the short term, there seems to be at least a move up to the previous high at 1150, where perhaps we could see a short-term correction. Where was I? So was I at the long position? Perhaps let's look at that. We'll be looking even, well, long above 110, let's say. We don't know if we're going to go back there, but I think it's not something unlikely. If you want to do an entry at 110.50, that's also fine because we are looking at the long term here. So our stops would be below 108, okay, just tiny bit below the neckline because that would probably add a lot of downside risk. And then to the upside, we never go with one target. First, we'll go to 111.50. That is obviously not a good risk reward ratio. Then we go to the next levels we mentioned, and I'm just going to pull them back here. We're looking at 112.16 and 115.10 or whatever, the 61.8 and 78.6 Fibonacci's. That's 1.60 in terms of ratio, in terms of risk reward. And then we look as a final target, the previous high. Okay. And why do I say that? If we just take this out, and what is supporting currently this particular move to the upside is, and you can look at it by yourself, this is looking like a triangle pattern. Okay, so even if we assume that the investment show this is not going to play out, we're not going to see prices, what we are currently seeing is a correction in the longer term, right? And this corrective structure supports and indicates further upside, not just to the previous high, but also higher up. Just to make it a bit more clear for everyone here, this is an ABC, D and E. And if we do connect with the waves, you're going to see that we have had a breakout pretty much and a retest at the same level. Okay, so the retest is at the same level, even if we look at it as a triangle pattern. Okay, the only issue with the triangle pattern is that it just, these 2 points are going below that low, and they are also, it also looks like a descending triangle, which is not much of a likely scenario. But in the very much longer term, this is also a running triangle. Okay, so you will see A, B, C, D, and E perhaps with a very, of course, short wave E. But again, running triangle, which supports, again, further upside. So the only risk events I see in the, I would say medium term, is a surprise BOG rate hike in December, which is unlikely because it's sitting currently at 22% odds only, or Japanese authorities intervening to support the yen, as also USD JPY is moving higher to territories that we haven't seen for a while. So I think 155, 156, or going higher also might bring this particular risk event into focus. Though they've been talking about it for weeks without actually doing it because USD JPY is already at kind of worrisome levels for the BOJ. So the strategy is to go long above the 110, 110.50 with stops below 108. First target 111.50, 112. Second target 116 plus, and then pretty much the 61 and 78.2 Fibonacci's. Then we'll look at the 180, 30, whatever, and just not forget the measured move of the neckline. This is multi-week cover trade setup with income and capital gains both working in your favor, because you can also win gain swaps overnight. Okay, so that's your CAD yen trade from Thinkmarkets. Trade these levels, respect your stops, and let the carry work for you.